and this kind of goes back to what we were talking about, the difference between long-term and short-term investing, is precious metals. And I've got kind of mixed feelings on gold when it comes to whether this is a long-term or a short-term trade. Similar to what Jim has said, I think that owning actual physical gold is a good idea for the long term. Put it in a safe, put it somewhere that only you know where it is, and it does hold its value, especially during an inflationary period. That's great, but that's not what I want to talk about today. What I want to talk about today is the trading opportunity for gold and other precious metals. And for this, I'm thinking about a 6 month, 12-month, 18-month period where we have an unusually high opportunity to make money from precious metals. So you probably have seen gold right now is at kind of what I call the 2K battleground. Gold has been trading around $2,000 an ounce, a little bit above, a little bit below. But this is an area where gold topped out previously. I think it was in 2011, but excuse me, we'll say several years ago.
Yeah, I pulled that up. This is the June futures, so the prices are going to be a little bit off of the spot or whatever. This is just a 1 year on the June futures.
Yeah. Yep. And see there you go, 1993. And futures are a little bit off from the spot price, typically because of interest rates. And what basically, if you buy spot gold, actual physical gold, you have to put all of your money up. But futures, you have to put up a margin amount. So they'll be off a little bit just because of the value of the dollar that you get to keep in your account instead of buying actual spot gold. That's a little more academic than we probably want to get into today. But the bottom line is that gold is moving higher. It's kind of facing a little bit of resistance right at the 2K mark. But once we break above $2,000 and hold above $2,000 per ounce of gold, I expect gold to actually make a really big surge and possibly hit 3,000 or more by the end of the year. Gold is an interesting investment and trade. The reason I like to trade it right now is because this is a really big breakout moment for gold. And so I think you should still keep that physical gold in the safe place that you've got it. But I love the idea of using financial markets like stocks and ETFs to capitalize on this. We'll call it a short-term move, but maybe an intermediate-term move for gold. If gold moves up to $3,000 an ounce, that gives you a big opportunity to make money on GLD, which is a stock or it's an ETF that tracks the price of gold. It gives you a big opportunity to make money on gold miners and on gold streaming companies or gold royalty companies, which also just make money because if you're a gold miner and you're able to sell the gold that you pull out of the ground at a higher price, obviously your prices will move higher as long as your expenses are under control. So why is gold moving higher? One of the main reasons is just because inflation is driving price of gold higher. Inflation just means that it costs more of everything to buy, or costs more dollars to buy whatever it is that you want to buy. And that's true for our laundry detergent. It's true for gasoline. It's true for the main things that, food and the things that show up in your day-to-day life, but it's also true for commodities like gold. About a year ago, we saw inflation pick up and we did not see gold trade higher. And there was a really big question kind of in the investment community, why is gold not trading higher? Well, it had to do with the strength of the US dollar. As the Fed raised interest rates, the dollar remains strong compared to other currencies. And so when the dollar is strong, it means that you don't have to spend as many dollars to buy things. So those two forces were kind of opposing each other. Inflation is supposed to be a tailwind for gold, but a strong dollar is a headwind for gold. But all that changed in October of last year when the dollar started weakening. And the reason the dollar started weakening is because investors started sniffing out the possibility of a recession and the possibility of the Fed cutting interest rates. And that caused the dollar to move lower in comparison with other currencies, and also just as far as what the dollar could buy. That trend has continued. So the US dollar continues to move lower compared to other currencies. Part of this is because of just central bank policies in Europe, in China, in Japan, and in South America, and many other areas of the world, which are helping the dollar fall compared to these other currencies. And then part of it is just the inflation that we have here in the United States. But the bottom line is that as the dollar moves lower, that gives us even more of a tailwind for gold on top of the inflation story, and that's driving gold sharply higher. And that's why right now I believe is kind of one of the key times that you want to double down, if you will, on your gold investment. Still hold that long-term physical gold, but at the same time, make sure that you're invested in these opportunities. Now, Matt, we were talking about the Income Alliance just a little bit. And on May 4th, we're actually going to be kicking off my $100,000 model portfolio as part of that trading service. And I do anticipate that within the first week or so of that model portfolio kicking off, that we'll be taking a pretty aggressive position on gold or gold miners in that trading service.
Why don't we take a step back too, because we can sort of explain the whole thing. And again, you're here on the Rickards Uncensored call, everyone. This is not a sales pitch. This is just you're inside our circle, and our circle, we're always doing things. We're trying to launch new products that serve our readership and things like that. So what we want to do is just kind of talk shop about it. Zach had the event last night. He's launching a brand new service. It's called the Income Alliance. I saw some questions in the chat. It's like, hey, is this part of Jim Rickards' sort of silo and world? And again, I want to clarify some of that stuff. Zach is obviously his own analyst. He's got his own credibility, all that stuff. In insider intel, that's where him and Jim work together to pick opportunities. What the Income Alliance is, it's separate. This is under Zach's silo. This is a Zach only product. And it's sort of, Zach, you've got free reign to just do whatever you're wanting, whatever the charts and your indicators are telling you. So again, sometimes this is, some people like this, some people don't, but there might be stocks in there that are lighting up. If anyone watched the event last night, like lighting up all green lights, but it might be a stock that, like the narrative doesn't fit, something else we're talking about or whatever, but it's a good buying opportunity, right? So that's where this is, Zach has sort of free range to do anything similar to what he's been doing in his personal portfolio. And the thing that we like, and this is a policy that changed 6 or 8 months ago at Paradigm, and it's a great one, is that now Zach can invest alongside the readership. So if you're at home and whatnot, like Zach is really good at trading personally. Now he can trade personally and tell all the readers about it, and everyone's in the same trade at the same time. And again, the way our policy works, Zach isn't able to sell before the readership. And so everything gets buttoned up really nicely, but he's putting his own money into these same trades. So that's kind of what the Income Alliance is all about. We had a big event last night. If you haven't seen it, it's well worth you watching. Jim appears there as a strong endorsement of what Zach's doing, and he knows his portfolio is good. And the other thing I'll say is you want to watch that thing. I'll see if we can send a link around to it. Again, it's a presentation. It outlines sort of what we're doing, why it's important in Biden's America right now, why you need more income, why you might want to try this trading strategy. The other thing that's really cool is at the end, you'll see this thing is, we've priced it very well. As in, we want people to get in. This is not the same high price as some of our other options trading services. And that has nothing to do with the quality of the service. The service is very high quality. It's just, we wanted to get more eyeballs on it and have more folks team up with Zach. So we'll send around a link to that if you haven't seen it. Or if you see something in your emails that are talking about the banker is Zach. And Zach is great at trading, and he's been really good. One of the things, we've got questions coming in, Zach. One of the things that you can answer this, but I can answer too, but like people are asking about your win rate. Like they're like, hey, what's the win rate? I don't know if you know it or not, but you might just want to say sort of like, does the win rate matter? Like in this type of sense, or if you can explain that to answer those questions. Sure.
No, I think that's a really important question, and not to dodge the question, but I think that, like you said, it doesn't matter as much as you might think. So I will say that the win rate has been positive, in terms of just the number of wins versus the number of losses, and I'm very happy with that. But what I think of when I'm as a trader is the value of your wins versus the value of your losses. So every trader is going to have some wins, every trader is going to have some losses, and the question is, what do you wind up with at the end of the day? And when you aggregate your wins and your losses. And my model portfolio actually did very, very well last year in a difficult year. averaging the wins and the losses together to a point where I was actually able to turn a $100,000 model portfolio into 190% gain over the year. And that is, past performance does not guarantee future results. And it was a good year. We'll see what happens this year. I expect, there's still some great opportunities, but point
and you're
is,
talking like this is people can see in the presentation, but we're talking 100 and I think it was 163 trades. This isn't something. This is like you were actively in there, and this wasn't like, oh, I got a few wins and like I did great last year. This is like it was a very systematic, lots of trades, good win percentage, but not like some people be like we have 100% win percentage or 90%. It's like it's not that. It's just way more wins than losses. But the wins and the way you're managing money and managing the portfolio, it's putting more money into the account. That's what that's what matters at the end of the day.
So from a trading standpoint, this sounds so simple, and it's more difficult than it sounds. But one of the phrases that I've got on my whiteboard that I look at every single day, right behind my computer monitors, is don't water your weeds and pick your flowers. And it sounds a little silly, but here's what that means. Let's say that you've got a garden and you've got weeds growing in your garden and you've got flowers growing in your garden, just like everybody else does, right? Well, if you love your flowers and you pick your flowers all the time and you keep throwing water on your garden, what's going to happen? Well, the weeds are going to keep growing and there's not going to be as many flowers because you picked them. What does that have to do with investing? Well, when you're investing or trading, more accurately, when you're an active trader, you're going to have some flowers, some really good positions that are working well, and you're going to have some weeds. You're always going to have some that don't turn out the way that you expect. Now, human nature is, if you have something that works well, you want to go ahead and lock in those profits, right? Let's go ahead and sell this, get rid of it. We just made, 20% on this position. That's really great. And it is great. And I love that. But the other side of it is, if you have a position that moves against you, if you stick with it, if you keep holding it, if you maybe buy more and you add more capital to it, that's the same thing as watering your weeds in a garden. You wind up with bigger and bigger and bigger losses with very small profits because you took your profits off the table too early. So one of the things that when I was at the hedge fund, we had, my boss used to say all the time was, if it's working, buy more. And to a certain extent, that's kind of one of the philosophies behind my trading approach is, if it's working, let's make sure that we keep investing in the thing that's working. So we might adjust the trade to take some profits. We might adjust it to reduce our risk, but we're still going to stay in the trades that work well. And what that winds up doing for our trading account is it allows us to book larger wins. It allows us to cut smaller losses. So even if you wound up with a 50-50 portfolio where you had half as many wins as you had, or you had the same number of wins as you had losses, if your wins are much larger and you're cutting your losses before they become a big problem, then you wind up winning over time. So that's a big part of the philosophy. Of course, we have an indicator that helps us isolate the best trades, but at the same time, we're managing those trades very carefully. And that's what I think is part of the secret sauce of being a successful trader, is really managing your trades along the way.